There comes a time for many investors, particularly retirees, when they are considering locking in the gains of their investment portfolios. This is more prominent following times of extended market increases. The age-old wisdom of buy low and sell high comes to mind. However, knowing when to buy or sell isn't always clear. There are investors that claim to be able to time the market, but in my experience, I haven't found any that do it well. After all, if someone really knew exactly when to buy and when to sell, do you think they would tell anybody else? This brings to mind another favorite saying regarding investing. It's not about timing the market, it's about time in the market. So if you are in a position where you have sizable gains in the market, what are you supposed to do? Simply buy and hold forever? Are you required to stay invested in order to not miss the next up move or to avoid selling at the bottom? This fear of missing out or being wrong is what paralyzes many investors. But it doesn't have to. I don't own a crystal ball, and I certainly don't claim to be able to predict the market. However, I do have experience and knowledge helping people know when to take gains off the table. While I do work with money managers that provide certain cues as to when a market sector might move one way or another, this isn't what I'm referring to at all. The time to take gains off the table isn't all based on the volatility or direction of the market. It has much more to do with the situation, both financially and emotionally, of my clients themselves. When I work with clients, a big part of my job is determining the long-term plans and goals and retirement dreams. Working to those goals, I help determine how much risk and what type of assets are needed throughout the relationship. For instance, a 47-year-old investor who is looking to retire in 15 years and a 70-year-old investor getting ready to take their required minimum distributions from the IRA will probably have two very different mindsets about harvesting gains in their portfolio. It is my job as an advisor to know my client well enough to help guide them. But regardless of your situation, I caution against the fear of locking in gains. Regret can be a crippling emotion, but oftentimes people regret losses rather than locking in gains. If you are in a situation where you have mixed emotions about whether or not to adjust your portfolio, don't be upset, as it's completely normal. It may be time to adjust the color of your money or your risk file. For more about this, please check out my video called The Color of Money. The key is not to freeze up and do nothing. If you are unsure, take some time to talk with a financial professional. Our job at Dolphin Financial Group isn't just manage your money, but also to help you through the emotional decisions and turmoil you face when making decisions, such as when to lock in investment gains. Whether you choose to lock in gains or let them ride, it's a very personal and situational choice. But just remember that ignoring the situation is the same as deciding to do nothing. Be proactive about your decisions and take control of your financial future. Give Dolphin Financial Group a call to set up a time to chat about the tough financial decisions you might be facing.